Could you share a little bit more about, the vertical you chose to go after and why it made sense to have to not have a horizontal offering here and really go vertical to meet user needs?
If you look at a PayPal product or a bank product, these are products that satisfy a little bit of every need. And banks being the supermarket that they are, they have to solve for everything from large corporates to small corporates to individuals, with the net result that they are not able to 100% satisfy a particular segment. And for a startup, I think it's critical to be able to really be everything for a small subsegment rather than be something for a lot of people, because then you will never get that traction and the momentum that is required to get off from ground zero.
Everyone wants to serve this segment, right? And historically, a lot of incumbent players have also been serving this segment. So how do you think, one is definitely through this customer experience, but how has that evolved over time? How have fintechs been serving this segment in the past? How has that evolved?
When it comes to affluent segment, just offering good customer experience doesn't help.
Yeah.
For example, a lot of entry-level customers, this is good enough. Because anyway, when it comes to pricing or lots of other features, they get more or less vanilla product for banks. But these customer segments are used to get very good quality service, and they get cheaper rates on loans, higher rates on deposits. They get lots of features available to the branch, through the branch network and things like that. So it is expected that these become hygiene for them.
That SMEs are underserved or unserved today. And a lot of the onus on bringing them into the deeper financial services fold will be on fintechs or new age tech companies. Could you talk a little bit on what are the big levers companies such as yourself or new age companies will use to really start serving this segment better?
Our commitment to India, our commitment to our country is being that we will solve for small payments ubiquitously, and extending that is we will solve for small credit ubiquitously.
So one of the big themes we explore in this report is just bridging the large insurance and protection gap we have in the country. And one of the big belief systems is fintechs will play a big role in bridging that gap. What will make us bridge that gap, both from a manufacturing and distribution perspective?
I think the protection gap in India is way larger than we all imagine. And the reason I say that is a large part of the insurance so-called penetration in India has been done on savings products. So really, if you knock off the savings products, which make a bulk of the insurance to GDP kind of penetration number happen, we will actually see that the numbers are even lower than what it is. And I'm not even talking about Bharat, so to speak, even in the metros.
To be honest, I think my co-founder and I are both from consumer product companies before this. Being outsiders to the payment industry was a little bit of a blessing in disguise because we thought about it from customer first. And I have myself been a business exporter, and therefore empathizing with the customer was very natural for us. In fact, I think we would have really struggled if we had gone with a product first approach and built certain products. Because I feel that what really a customer cares about is solving their problem. They are not really excited by technology, or they're not excited by new trends, or they're not excited by some cool UX that is in front of them. They are really excited that okay, I can actually go home and have dinner without worrying about my payments. I don't have to track my payments now because I know that there is a tracker ready. I don't have to worry about haggling for forex rates because some system has taken care of it for me. So I think that's really what is important, and probably our status as outsiders to the industry kept us honest to the customer and less indexed on product.
When it comes to affluent segment, just offering good customer experience doesn't help.
Yeah.
For example, a lot of entry-level customers, this is good enough. Because anyway, when it comes to pricing or lots of other features, they get more or less vanilla product for banks. But these customer segments are used to get very good quality service, and they get cheaper rates on loans, higher rates on deposits. they get lots of features available to the branch, through the branch network and things like that. So it is expected that these become hygiene for segment. Just because you are a fintech and you're offering a better customer experience, you can't say, fine, I'm going to give you a personal loan at 300 basis point, 200 basis point higher than what you would get otherwise. This segment won't do that because their financial needs are much more evolved. They like, of course, most of these customer segment is also very, I would say, digital savvy. These customer segment value brand and trust a lot because the value at risk is higher. Okay. And now for a new age technology company, all of us are still building brand. A brand gets built over a period of time. So a lot of us are trying, a partnership route where we partner with, let's say, a traditional bank, which brings the strong balance sheet, long legacy of brand, distribution reach, and things like that. A brand which has been around for many years. And then you have a partnership from a new age technology company who's built full stack, product to offer a digitized customer experience.
Our business model is based that the book, the underwriting is a part that a typical lender does, and the disbursement where the acquiring customer, helping that digitally get onboarded on the system, get the money in the bank account of the customer, and then in due course collection is the scope that we learned are the biggest cost of the system, or these are the biggest inefficiency, if you will, or under executed scope, or now that India is going through mobile internet revolution, could be the place where we could innovate. So Paytm has done innovation on distribution and collection of small credit, and I believe that is why we champion the same when it comes to loan size, ticket size of what Paytm disperses. So we're rather happy being dispersing 1 crore loan of 1 rupee instead of one loan of 1 crore rupee. Obviously, this is a metaphoric number. Obviously, we are not dispersing 1 rupee loan either. Intent here is to say that how many more Indians we are able to serve with formal credit access that our country's regulator and government are aiming. So the innovation or the work that we focus on is how low cost we can acquire a customer and how low cost we can help collect the loan for a lender. The keyword is for a lender. That way, the lender's rating, performance, capabilities, their compounding knowledge of underwriting also becomes an add-on force to completely execute together.
There are 3-4 different aspects on which technology or insurtechs or people with a technologically oriented perspective to the business can really help this situation. First is just trying to sell at the most basic level is just trying to sell the right product. The problem is with some of the products that are actually good for users from a protection standpoint don't have enough margins for physical distributors to sell. The incentives are poorly aligned, and that becomes the first area where if you could take a product like term insurance, which is shockingly just a $700-800 million market in India annually. So the first thing is the technology just reducing the cost of delivery and disintermediating that physical agent who maybe is today not interested in selling that product is because of margins. I think that's one of the most simplest areas where technology will start playing a role for products that are not viable to be sold through a physical distribution network. Second, I think in terms of product innovation, one of the other things is we're a low trust society. People already have a little bit of a negative perception about insurance, not just in India, all over the world, that claims are problematic. I don't know what I'm paying for, and so on and so forth. So I think one of the things that at least Acco's learned is that people are okay to ladder up. So when you do small stuff, which is give them some small accident insurance or give them something for their phone, and they realize the value that I could replace the screen, of my phone for 5,000-6,000 rupees, and my claim actually came through. They start building some sort of trust with the ecosystem itself. And that kind of laddering up is where I think manufacturing or product innovation kind of comes in.